Hey everybody, welcome to this free edition of our Trader Use Group Weekly Roundup for the trading week ending March 8th, 2024. I'm Preston Brent. Thanks for tuning in. Well, the theme for the week is it time for a pullback? I know a lot of people have been hearing about that a lot lately, but the markets are still blasting higher. Let's take a look at this past week, kind of where we've been, and we'll take a look at the charts in a minute and see where things seem to be lining up. You can see for the U.S. indexes, most of them were just slightly in the red. Russell was the only one that managed to finish in the green, but year to date, everybody's solidly higher. The S&P is actually outperforming the NASDAQ index, the composite index, over 7%. Dow and Russell, a little over 2% each. You can see the PE ratio trailing 23.15. That's huge. That's just a big, big, big number for the PE ratio. Okay. If we take a look at the forward, it's about almost 9% lower at 21.10, but still elevated. All right. Still elevated a lot. So the trailing PE ratio is up right around the 95th percentile, meaning it's only been higher 5% of the time more. So this just tells me that there's just a ton of money in the markets. And generally, when you get this far stretched, there is a period of consolidation pullback, but we're still in a buy the dip mode, as I tell all our members. So this is something you have to think very carefully about. Okay. It was a rare week in that most of the markets were down just slightly. Keep in mind, we've had, of the past 16 weeks through this, not this week, but last week, 16 of the past 18 weeks, the S&P has been up in the green. First time that's happened in 53 years. Okay. So it just shows you the nature of this move and a lot of money coming in off the sidelines, rushing in. And that tends to push things a little bit higher, create the market that's a little bit more stretched than it should be. You can see the dividend yield 1.37, 10-year treasury closed out the week a little over 4%. Earnings yield about 4.74. You can see the current VIX, it was up about 6.6% for the week. It closed just slightly under 14 at 1397. Best sector for the week, a rare victory for utilities. Okay, that's because interest rates came down. More on that in a minute. Over 3.29%. The worst was discretionary. And then you can see year to date, we don't have a major sector in the red. Real estate's coming up off the lows because interest rates seem to be subsiding. Communication services is leading the way at 9.54%. Okay. We saw this past week the Beige Book from the U.S. Feds. It's like 12 regional areas here in the United States. And it showed that consumers are still showing more sensitivity to rising prices everywhere. Okay. Labor Department said that job openings fell in January to the lowest level in 3 months. And the quit rate, which is the share of workers leaving jobs, typically is considered a good measure of worker participation, or perception rather, of the ease of finding a new job. It also fell to the lowest level since August of 2020. Okay. And we did get the Friday jobs report. It kind of reassured investors a little bit. It showed that employers added 275,000 jobs in February. Now, the forecast was only 200. So it came in hotter than expected, so that tended to put a downward angle in the price action on Friday. Okay. We did see a revision to the downside in January. Remember, January came at 353,000, but they revised it down to 229,000. Unemployment rose up just a little bit to 3.9%. Okay. So the markets just eased off just a bit as we were going into the end of this week, which gave us mostly red on the screen, not too much, but red on the screen a little bit. The other thing we got this past week, which was a big deal, was Boom Boom Powell. That's Fed Chair, Power Ranger Boom Boom Powell. Okay. He testified in front of Congress and the Senate middle of the week, Wednesday and Thursday. All right. He pretty much reiterated his previous talking points, but he did offer some less hawkish takeaways, right, on the timing of the path of rate cuts. He said they were not far from cutting rates this year. So that helped equity markets just a little bit, right? That also helped push the 10-year yield down to that 4.04% for the week. Okay. Now, if we look across in Europe, you can see here it's kind of a mixed bag. Euro stocks and the CAC 40 were up, but the FTSE and the DAX were down. Okay. The ECB over there, they left their rates unchanged this past week. They're following the Fed, right? Boom, boom, Powell. Christine Queen Bee Lagarde, who runs the ECB there, pretty much has got the same talking points as Boom, boom, Powell here in the U.S. So wait and see. But they're also saying they're probably going to cut rates this year, right? We did see that inflation over there has fallen or is estimated to fall to 2% in 2025. All right, so they're bringing in their forecast of how long it's going to take to get their inflation down to 2%. It used to be 2026. Okay. They also cut their economic growth forecast to just 60 basis points in 24. Okay, which is slightly lower than it was before. But then they expect growth there to accelerate in 25, right? A lot of people think Europe's already in a recession right now at the bottom of it. And then, of course, if we go over the Asian markets, you can see over here in Japan, a rare down week, but look at it year to date, 18.63% to the upside. Really kick-ass year for Japan, right? Household spending over there, meanwhile, fell a little over 6% year over year in January. That's the sharpest pullback we've seen in about 3 years for Japan. But inflationary pressures, kind of having the effect of weighing on domestic spending. Okay. Nominal wage growth came in higher than anticipated. Wages going up 2% year over year in Japan. They were expecting 1.2%. And the CPI rose to 2.5% in February. So that's good news, and that's spurring more talking points of Bank of Japan going away from their zero or their negative interest rate policy. Members, I'll talk to you more about that this Sunday, but there's great trade opportunities with Japan, and we'll go into the more detail Sunday evening for our weekly market watch for our members. And then, of course, if we look at China, they're scraping along, 63 basis points up for the week, 2.39% year to date. All right, they're gaining some momentum because the government's putting a lot of money into that economy, right? They set their economic growth target to around 5% this year, the same thing as last year. So essentially flat. They're having their National People's Congress meeting. It started this past week on March 5th. It ends on the 11th. And that's when they set all their economic targets. And Chia Pet-chi gets out there and talks about, how great of a leader he is and what's going on over in China. I don't believe half the stuff that's coming out there, but that's what he says. That's what the markets are trading. We're seeing right now that analysts are expecting China to stay slow for quite some time. All right. They're still having real estate difficulty, really big time with that. On the economic front in China, their global survey of services fell to a weaker than expected 52.5. Now they're still over 50, but it's still fairly weak. We did see Chinese exports and imports move up in the first 2 months of the year. I think exports grew about 7.1%, but that was slightly above consensus, all right? Imports improved just a little bit as well, but it's still slow as she goes or steady as she goes in China, all right? A lot of people are moving their manufacturing base out of China to Vietnam, other Asian countries, India, and Mexico. Not only the U.S., but Europe's doing the same thing as well, okay? What I want to do is take you over. Let's go take a look at some charts here real quick. Let me just swing you over. I'm going to start off with the E-mini S&P 500 futures. Now, one of the things you're going to notice, some brokerage platforms allow you to choose the futures contract month. Thinkorswim and others pretty much put you automatically in the front month. All you do is just /ES and it puts the front month in. And then when they switch over to the next, or not front month, but the front quarter. But a lot of brokerage firms are now shifting over to the next quarter, which is in June. And it also varies by charting package. This e-signal moved everything over, so it created a gap up. I mean, if I put it on let's do a 10-minute chart, you'll see the gap up here. Let me just back it out just a little bit. You see this gap right here. when the charting packages move it over to the front, in this case, index futures are always quarterly expiration. We are coming through the end of March, so they're going to move it over to the next quarter, which would be June. You can see that gap up. So the S&P futures, like the NASDAQ futures, like the Russell futures, generally they're all in contango, meaning the further out in time you go, the higher the futures price. So when they do that move higher, you get this big move like this, and it does screw up your charting just a little bit, which is why I like to also use the SPX, the cash index, because the cash index doesn't have that gap. It trades where the S&P is today, closer to the spiders. Now, if you look at this on this weekly chart right here for E-minis, you can see this October low, and then just the move higher off this October low. We've moved up a lot, okay? Over 6 months' time, if I were to just do kind of a back of the napkin calculation from the intraday lows to the intraday highs, you're up you're up. It's just almost 50%. It's crazy, right? Let me just widen it out a little bit so that you guys can see it a little bit more. Let's do it again. Off these intraday lows in October, up here like this to where it closed, 48% roughly. That's huge. Normally, when you get a really strong um, uh, momentum thrust like that, you're going to have a little bit of a pullback. Now, everybody's trying to guesstimate when that pullback's going to happen. It's hard to do because there's so much momentum in the markets. We had a little pullback here, believe it or not, in July of 23, and it pulled back and gave us these lows here. And if we look at this October low here, it's almost the same here. If you look at this, this was in 22. And we pull back in October here, and here's another pullback going into October here as well. If we look at where we've been, and this is actually for the past 6 months, sorry. If we look at the past 6 months off the prior 6 months low, you're going to see here it's up over 26%, right? So I still believe we're going to get a little bit of a pullback here in these markets, but you can see that big impulse move as we're moving up, right? Now, if I put it back on a daily chart, you're going to see right here how stretched we are off the 50 EMA and the 200 EMA, right? When price action gets too stretched, too far above the 50 EMA, it generally will come back towards the 50 EMA again, right? And that's what I expect here. When's it going to happen? Well, I'm looking at this. I've told our members we can expect there's really no catalyst right now short of earnings, and earnings are done, short of just the data coming out, hitting the wires, and then the Feds. Now, we got a big catalyst coming up this Tuesday with the CPI, and then we got the Feds on March 20. Okay. And we get their dot plot. Members will go a lot more detail this Sunday evening on what we can expect. But you can see this movement here. And I do believe we're going to see a little bit more softening. See how the MACD's running flat? The green line is the signal line. The red line is the MACD line. And when you run flat like that, that shows consolidation. And you may say, well, hell, even during consolidation, we're moving up. And that is the momentum in the market. When you've got very strong momentum, it will move up like that, right? But we can expect a little bit of a pullback. The last sustained pullback we had was going into this new year, right? We had over a week and a half of a pullback right here. It wasn't a lot if we just kind of take a look at it and see from the intraday highs to the lows. It was only about almost 3%, right? Almost 3%. And then we had another pullback right here. Let's see what that one did. That pullback right there was about, oh, come on, let's go. This pullback was about 1.7%, okay? And then this pullback right here from that intraday high to the intraday low was about 2%. And then one final pullback that we've had right here just a few days ago, which wasn't a lot. It pulled back to intraday low of about 1.4%. So we're not getting a lot of pullbacks here. I will remind you, since the October lows back over here, right over in these October lows here, made in 23, we've had about 6 minor pullbacks. averaging anywhere, well, not averaging, but anywhere from 1.7% to 5.8%. And that's it. So we've got to, I think we're going to be due for another one. So let's just be very careful about this and see how things shape themselves out. Now, one thing is we're not getting a lot of the strength in some of the Mag 7, or few we are. If we look at the FANG index, right? Now, this doesn't include NVIDIA and Tesla. You can see we made an intraday high on Friday, but we've essentially been running flat, right? You can see this just eyeballing it. We've been running flat with the FANGs. But if we look at the equal weight S&P, check this out. What that tells me is the equal weight, now it's up at intraday high on Friday at 5.31%. But that tells me that we're getting some money moving out of some of the Mag 7 and some of these high mega cap growth tech stocks moving into other areas in the market. That's a bullish sign, okay? Not enough to really keep the market going at the speed and the rate of change that it has been since October, but that's a good sign. I want to see the equity market participation broaden out a little bit more, okay? And that's kind of what I'm seeing here in this. And if we look at the Russell small cap, you can see the Russell has now moved back into the green. Again, that gap up there because it's a futures contract. It's showing an intraday high of 4.94, but really it's a little bit lower than that. But as we move forward in time, that should act as a little bit of a downward pressure because the premium was really high across all index futures for the June contracts, right? Which tells me the markets are expecting good things over the next 90 days, essentially. Okay. And of course, if we look at the Dow, let's look at the Dow index. You can see here it's been moving lower, right? So the Dow is actually it was up 4.1% on February 26th, and we haven't made new highs here. And you can see the MACD is rolling over just a little bit there, okay? And if we look at the composite NASDAQ, you can see here the MACD has just been slowly rolling over, and we made intraday highs on Friday, but it's kind of running a little bit flat as well. Okay. And if we look at the top 100 stocks in NASDAQ futures, 100 futures, you can see here when we rolled over, it made an intraday high, but essentially it's flat. Right? You can see the MACD moving lower, a little bit of a consolidation, a lot of chop. Okay. And if we look at the VIX, it's just and I've had this regression channel on going all the way back to December of last year. And you can see we're just slowly moving higher, right? So that tells me that volatility with this big movement, generally over time, if vol is moving higher while indexes are moving higher, that's telling me we're setting up for more than just a 1.5% pullback, probably 3 to 5% near term. Now I'm expecting a bigger pullback in the early summer months, 5 to 10%. Probably 8 to 12%, somewhere in that range, but we're not there yet. Okay, so this is kind of what I'm seeing. If we look at the front month skew in vol futures, you're going to see here that we're just on the upper boundary of the green, meaning we're still in contango, but not by much. Now, when the March futures contract expires in another week or so, then the VIX and March futures contract will be equal. Now, if we go look at the back month, this is comparing March and April, you can see we're well in the green. So a contango, this is a normalized skew, by the way. So that just tells me that the markets are not that concerned right now. We're still in a bull market. We're still in a buy the dip, okay? So just understand that. We're getting a little bit more participation by other stocks, but that's kind of what I'm seeing. And if we look at the 10-year interest rate, you can see here it's been coming down just a little bit from the 2024 highs last seen on Feb 22nd. Okay, you can see it's coming down a little bit because we're starting to see inflation come in. Boom Boom Powell's a little bit more dovish than hawkish in the Senate Banking Committee meeting on Thursday and the Congressional Finance Committee meeting on Wednesday, right? So that's had a tendency to push the 10-year rate down just a little bit. All right, we're still in the green for the year because you could see off these lows here that were made in late December going into this new year. We're still higher, but I suspect, in fact, it's. I'm looking at. Um, I think interest rates are going to be a really interesting tell because there's more to play here in interest rates than just what is Boom Boom Powell going to do in cutting rates. Because we got quantitative easing, we've got a lot of we got over 1.5 trillion in a fiscal deficit, which has got to be financed at the bond and the 10-year note auction market or the U.S. Treasury auction market. And we could see buyers demanding higher interest rates, which is going to force this rate up no matter where the markets go. So there's going to be a lot of interesting take on this over the next 90 days, I think. Currency wise, well, this is what I was talking about. Okay. If we look at the yen, we're coming up, guys. Members, I'll go into more detail with you this Sunday evening, but I'd put it on your watch list. Okay. And then, of course, if we look at the US dollar, it's going to be moving a little bit lower, right? We're still in the green for the year. I think it's going to stay down a little bit. The euro, I like that longer term to the upside. You can see here we've cleared the 50 and the 200. A little bit of a backside retest, but I think it's going to come up, take out 23 close, take out these highs over here that were made in December of last year, and just keep right on rolling. Okay. And then, of course, if we come down here and look at gold, gold's been, it's been a stealthy agent. It's been moving higher. Look at gold. I mean, that is just blasting higher, right? We've been stuck in this up, down, up, down. When we finally broke out, and we broke out of this closing highs that were made, last made in December of last year, we took off, okay? I would not chase this up here. No way, no how. I would let gold pull back, and then I would ease into it, all right? There's some interesting trades in this for members that we'll talk about it Sunday evening. And then, of course, if we look at silver, not performing like gold, right? You can see silver, we're in the green for the year, but you don't see that blast higher like gold, okay? I do believe we're setting up for some interesting trades, so we'll look at it more closely tomorrow evening for our members. Let's take a look at oil in the energy market. Oil is running almost sideways pattern. If you guys remember, I didn't think oil would get much higher than this. Okay. In fact, it's sitting right on the 200 EMA, and the 50 EMA is below that. So, if anything, selling call credit spreads above the money or doing the trades that we like to do with oil would make sense. Okay. And then if we look at nat gas had that low down there, and I was suggesting to folks to go long nat gas down here, and a few of you took it. Turned out to be a nice trade. I think it's going to catch itself. It's not going to go much lower, and then I think there's ways to trade this. Members will review that one as well. All right, everybody, that's just a quick update on some of the primary commodities and what I'm seeing in the markets. Everybody have a great weekend. Members, I'll see you Sunday evening at 7 p.m. Eastern Standard Time. Ciao, everybody.